Good afternoon, ladies and gentlemen. Welcome back to the 4th of November weekly market review. We have finished the month of October and have stepped into the month of November right now with the first trading day last Friday. So before we start today's weekly market review session, a disclaimer over here. Anything that we discuss today is purely for information purpose only and does not constitute financial advice. So please do not use this for your investment purpose unless you seek a licensed financial advisor before you get into the capital markets. Okay, so some of the adverts first. So we have an upcoming ASAS on the 20th of November, Wednesday at 7 p.m. So if you'd like to join us for this ASAS session where me and Gerald will answer your investment questions, you can scan this QR code over here to sign up for it. Okay, next, if you think that you have some feedback for us or think that we may be doing well and you like our program, do scan this QR code to give us a review on Google. You can give us a 5-star review, or if you have any feedback for us to improve our programs, do let us know over here as well. Okay, so what are the benefits of joining SIAS as a member? You get to access online resources on investment. We also can represent you in investment disputes, and also you can access our investors education program, and of course get priority registration in our SIAS program. So scan this QR code if you'd like to join us as a SIAS member, which only costs you $12 a year or just $1 a month. Okay, let's go into today's review in proper. So this is what happened to the US market last week. The S&P 500 dropped 1.4% and the NASDAQ Composite Index dropped 1.5%, while the Dow Jones Index just slipped down slightly by 0.1%. Our STI also followed the broad market movement in the US and dropped 1.1%. The key economic data that came in last week was, of course, on Friday, the US non-farm payroll numbers, where we saw that the US only added 12,000 jobs, and this is the lowest since the December of 2020. But why is this number such a low number and looks like an outlier among all the data in the past 12 months? This is because this number at 12,000 was actually impacted by the hurricanes in the US, and of course, there is a labor strike by Boeing as well. So these job numbers is, I would say, an outlier number, and it's considered a bit of a noise going into the US election and, of course, the rate decision next week. So I don't think that this would be a representative number that the Fed will consider in adjusting their expectation for the rate cuts going forward. So I believe this is actually maybe a good sign because there is one less consideration given that we have the US election in place as well. So I don't think the Fed will be using this as their consideration for the rate cut decision that is coming up next week as well, okay, which is expected to come in at 25 basis point cut. Okay, the US 10-year bond yields also rose to about 4.4%. So you can see that the uptick has been quite prominent in the past few weeks. So this is also the reason why we see that the drop in the major index, US indices last week, as well as the Singapore index as well, because the economy is still going strong and the Fed is unlikely to cut to make big rate cuts going forward, not like the 50 basis point cut that we saw earlier. So that's why that the interest rate are likely going to come down as fast. So that's why we see an uptick back on the 10-year US government yield, which caused the concern on the major index to come down last week as well. Okay, of course, we have next Tuesday, 5th of November. Sorry, this Tuesday, 5th of November, which is the US election. As of the 2nd November that we last checked, we can see that Harris has a very slight lead over here. Vice President Harris has about a 1% lead over Trump. But I would say this sort of a opinion poll is too little to get any decision right now or to make any conclusion. And the latest that I checked this morning, it was also around the same level. So I think that the results can be anybody between Harris and Trump that will come out on the 5th of November election tomorrow. So we are all glued to our TV to see who will be the next US president for tomorrow on live TV as well. Okay, back to the Singapore market, the top gainer last week on the STI, we see Hong Kong Land, we see Jardine Matheson Holding, we see Jennings Singapore, DFI Retail Group, and City Developments. Okay, so I believe all this jump in these counters on the STI last week could be due to the improvement in the optimism of the Chinese markets, where we see the Chinese property sector seeing the first growth recently in their macro data, and of course, better than expected PMI data as well. So this name with the Chinese exposure actually gains on the news of more optimistic measures that could come out or from the Chinese market on this week legislative meeting as well. So the biggest losers on the STI last week, you can see that Mapletree Pan Asia Commercial Trust dropped 3.7%, and some of the other REITs as well also have some kind of a pullback. And this is the reason because they are expecting that the rate cut may not be coming down as soon, and the rate cuts could be still sticking at close to the current levels. Hence, the REITs have some of a pullback due to the interest rate expectations. Okay. So this is provided by Gerald. In case you are wondering why I'm doing this weekly market review alone, Gerald is having his birthday celebration this week. So if you see him, do wish him happy birthday. And he is kind enough to provide some of the updates from Beanstalk as well. So these are the top performers of the REITs. You can see that Cromwell European REIT weekly change up 2.5% with a dividend yield of 9.1%. Sestry and Lendlease are also up last week between 1.8% to 2.2%. So these REITs are still giving quite good dividends yield, and some of their earnings might be coming up this week and next week as well. So some of the losers, we see that Suntec REIT, Lippo Mall Indonesia Retail Trust, and Capital Pacific US REIT dropping between 4.9% to 3.8% for the last week. And these are the REITs that has reacted to some of the interest rate movement already. Okay. So what to look out for when we said that last week we are expecting the magnificent earnings to come out. We saw the Google's earnings came out on 29 October last week. We saw 30th October Microsoft and Meta earnings, and of course the 31st October results of Apple and Amazon. Among the magnificent seven, these five counters actually, I would say, did provide us with a decent earnings performance, but did not really live up to market expectations for Apple, for Microsoft, and for Meta. Okay, although they still have a decent earning growth, but that was below market expectations, below what investors are looking for in terms of how they have come so far this year. And today I'll try to break down the earnings of Microsoft, Meta, and Apple to see why their price dropped despite their decent earnings performance. Okay, so this is the summary of the Mag 5 over here that reported their earnings last week. You can see that the only one that reported a negative earnings surprise was actually Apple, but this is due to a one-time tax decision that they make. Okay, if the EPS is adjusted, it could be 1.64 $1.64 US in USD. So that is actually slightly above estimate, but because of the one-time charge, the reported EPS was put down. So this was a negative earnings surprise over here. But for Microsoft, you can see that the earnings surprise was up 6.41%. That's a positive earnings surprise. And we also have Meta with a positive earnings surprise of 15.43%. So why when we have this positive earnings surprise, but some of the US tech stocks like Apple, Microsoft, and Meta price still dropped last week? I will try to go into the details. So for Apple, the fiscal fourth quarter results actually beat analyst expectations on revenues and earnings per share, but the net income actually slumped, and the company paid a one-time charge as part of a tax decision in Europe. So they actually reported a 97 cents earnings per share in net income during the quarter versus the $1.47 that they saw in the year ago period. So Apple also paid a one-time income tax charge of 10.2 billion to resolve a long-running case dating back to 2016 over how the company handled their taxes in Ireland. And if you remove the one-time tax charge, Apple adjusted earnings is actually $1.64, which is an increase of 12% on an annual basis. The revenue also rose about 2%, okay, for the full fiscal year to 391 billion. And in September period, it was up 6% from the last year figure, and the company cash pile now stands at 156 billion US dollars. So investors were disappointed as Apple said on an earnings call with analysts that it expects low to mid-single digit sales growth during the December quarter, which is usually the best period for sales, especially for their iPhone sales over here. So Apple's revenue in China, Taiwan, and Hong Kong, the Asian markets, was also slightly down year on year to about 15.03 billion. So these reasons cause some concerns over Apple as a growth stock for investors. And these are the reasons that put down the Apple share price towards the $222 level on Friday. Okay, so these reasons and the one-time charge of the tax decision in Europe caused the earnings per share to drop to 97 cents, and hence Apple shares dropped about 3.67% last week. Okay, next, let's move to Microsoft. Okay, so Microsoft reported their earnings and revenues beat for the fiscal first quarter last Wednesday, and the stock actually slipped about 4% in extended trading after the company forecast called for a slower than expected growth. So the revenue actually increased 16% year on year in the quarter, which ended 30th September. And the net income actually rose 11% to 24.67 billion from the 22.29 billion in the year ago quarter. For the current quarter, Microsoft called for the revenue in the range of 68.1 billion to 69.1 billion. This implies that a 10% growth at the middle of the range, but analysts was actually looking for a 69.8 billion in revenue, which was much higher than the range that Microsoft has provided during the earnings call. So outside suppliers were also late in delivering the data center infrastructure to Microsoft, meaning that the company won't be able to meet the demand in the fiscal second quarter. At the same time, Microsoft has been spending more cash on their infrastructure, property, and equipment as well. In the first quarter, in the earnings report shows, spending grew by 50% year on year to 14.92 billion, which was much higher than the consensus among analysts at 14.58 billion. So the disappointing current quarter outlook, which is lower than analysts estimate, and a big increase in infrastructure spending caused investors to offload the Microsoft shares last week. And for the week, Microsoft shares actually dropped to the $410 level from the 433 US dollar level. Lastly, let's look at Facebook Meta platform, which also had a drop in share price last week. So Meta Platforms actually reported weaker than expected user numbers and warned of a significant acceleration in infrastructure expenses in 2025 in its third quarter earnings that they report last Wednesday. So the company's stock price actually fell about 4.09% last Thursday, and their sales in the third quarter actually jumped 19% year on year, while net income grew 35% to 15.7 billion from 11.6 billion a year earlier. That figure actually represented Meta's lowest year-on-year growth for net income since the second quarter of 2023. So the company actually reported 3.29 billion daily active user for the third quarter. That was up 5% year-on-year and came in below the analyst expectation of 3.31 billion active user daily. So Meta also raised their capital expenditure guidance for the fiscal year of 2024 between 38 billion to 40 billion, and these expenses was also up from the 37 to 40 billion previously. So additionally, the company also expects that capital expenditure to grow significantly in 2025 due to an acceleration in the infrastructure expenses, and revenue for Meta Asia Pacific region grew only 15%. Representing that the company's slowest growth in the region so far. So this was down from the growth of 28% in the second quarter, and it was attributed to the deceleration of the lapping demand from China advertisers. So investors were concerned that the slower digital ad spending by China-related retailers would affect Meta overall revenue going forward. So coupled this with the weaker than expected user numbers that we discussed earlier and the capital expenditure that's going to grow significantly in 2025, investors are getting very worried about Meta's margins going forward. And Meta share price actually dropped 1.06% last week despite a positive earnings surprise. So we can see that going forward, some of the Magnificent Seven names may be ceding its market leadership, and this mixed results can be interpreted that this trend of the AI growth or the tech stock growth may be here to stay, where the growth is going to get slower. Okay, so in other words, the leadership that we saw last year among the Mag 7 tech stock for last year and early this year is now firmly behind us, and some of this growth could be spreading out to the other sectors as well. Okay, so what to look out for the week ahead on 5th November, this Tuesday. Of course, we have the US election. That is the most important data that we are looking out for. We also have CapitaLand Integrated Commercial Trust and Elite UK REIT earnings coming out. On Wednesday, 6th of November, we have Capital Land Investment and Fraser Logistic and Commercial Trust reporting their earnings. And on 7th November, we will start our 3 local bank earnings, starting with DBS. And of course, on Thursday, we have Fraser Hospitality Trust earnings, as well as the Singapore 6-month T-bills auction. And Friday, 8th November, we will see UOB and OCBC, as well as Singapore Airlines reporting their earnings. So we have a very busy week on the Singapore market this week, and we look forward to give you the updates on the bank's earnings next week. Okay, so now I'll move on to a roundup of how the chart looks like for the major indices globally. I'll start with the US. So you can see that the Dow Jones Index actually had a negative week last week, as what we have discussed. But on Friday, we do see an uptick. So I would call this a technical rebound, because why? It has hit the blue color line, which we discussed in the previous few weeks, that this could be a good support level for the Dow Jones Index. The blue line is the 50 days exponential moving average. It is also close to the lower bound of the Bollinger Band, now at 41,648 points. So this level actually, when it was breached last Thursday, right, investors start to pile in again on the Dow Jones Index due to it hitting a technical support level. If you look at the jump on Friday, you can also saw that it impacted the MACD indicator, MACD indicator, because that positive jump on Friday actually signals to us that the downtrend that we observed since the middle of October is already starting to subside right now, and we could have a technical rebound over here due to the support level on the 50 days exponential moving average and the lower bound of the Bollinger Band. The RSI also saw a slight uptick on Friday. Now the reading is at 46 compared to last Thursday reading of just 41 points. So we are close to the 50-point neutral mark, but we do not have the confirmation yet. Once it cross above the 50-point neutral mark, it will mean that the uptrend momentum will start to gain traction. And of course, that will also be limited by the 14 days RSI moving average now at 54. So we still have some confirmation from the indicators to get before we confirm that this rebound is going to sustain, and we are going to retest the new all-time high on the Dow Jones Index, now at 43,325 points. Okay. Next, let's move to the S&P 500. Same thing. We saw that some of the earnings misses, which we discussed on the MAC 7, caused the S&P 500 to actually have a slump on last Thursday. So when the slump happened last Thursday, it actually sort of touched the lower bound of the Bollinger Band, as well as the 50 days moving average around the 5,700 level. So that's why we had the bounce on Friday. So I think this is a good technical support level to get in on the S&P 500 again, to sort of play a sort of a round trading formation, at least to retest the high of 5,878 points, which we saw on 17th of October. Okay. Indicators wise, the MACD still have not given us the confirmation that at least this downtrend is subsiding. But I believe if in the next few sessions, it should give us some kind of confirmation to see whether the downtrend that we observed last week is actually subsiding already. And then the RSI now at 44 is still slightly weak. It's still 6 points below the 50-point neutral mark. If it crosses above the 50-point neutral mark, we could see a rebound happening on the S&P 500. But that being said, I would say the top side of the indices this year is actually near the high already. And if it retests the high that we saw in October again, that could possibly form a good resistance level, which is close to the 5,900 level. And that is likely my projection of where the S&P 500 will finish for the end of the year. Of course, we do have to look out for the US election, which could change a lot of things in this week and next week. So lastly, let's move to the tech-heavy NASDAQ Composite Index, which was very much impacted by the MAC 7 earnings of the 5 of the MAC 7 companies that announced their earnings last week. You can see that we saw a very big drop of about 2.7% last Thursday, and then we have a sort of a rebound of a 0.8% on Friday. Okay, so we have not tested the lower bound of the 50 days exponential moving average, as well as the lower bound of the Bollinger Band. So I think that there could be still some downside to come before the NASDAQ rebound again to retest the recent all-time high that we saw on Wednesday only at 18,785 points. Indicator-wise, you can see that the MACD looks to be just starting to trend downwards, and that could mean that there could still be some downward pressure on the NASDAQ Composite Index. On the RSI, the reading at 49 is quite neutral, not telling us anything, just 1 point below the 50-point neutral mark. So likely NASDAQ will be lingering below the lower bound of the Bollinger Band, between the Bollinger Band basis, which is at 18,380 points, towards the lower bound of the Bollinger Band at the 18,000 handle, which I believe could be a very strong support for the NASDAQ Composite Index at that level. Okay. So lastly, let me move back to the STI Index. The STI Index on 4th of November morning actually had a 0.48% jump, or a 17-point jump, after testing or dropping out of the lower bound of the Bollinger Band and the 50 days moving average last Friday. So we are looking forward to the local three banks earnings this week, which I believe could give a boost to the STI Index. So you can see that on the STI Index, we are now close to about, let me see, 3,572 points. That is about 50, 60, 70, that's about 80 or 90 points away from the all-time high that we saw on the 24th of September. And that is the next resistance level that we are targeting. And the indicators are showing us that the downtrend momentum that we observed in the past 1 week, the MACD indicator is telling us that that momentum is actually subsiding right now. And on the RSI, the reading at 48.5 is just about one point away from the 50-point neutral mark. And once it crosses above that, the 14 days RSI moving average at 54 points is very close by. If we breach both the 50 and the 54-point level on the RSI, the STI had a good chance to rebound further up towards the overbought level of the RSI at 75, and that could mean a rebound of the Straits Times Index to retest the year-to-date high at 3,652 points. Okay, so these are the updates that I have for you this week. So if you have any questions that you'd like to ask, do sign up as a member, and you can discuss this question on the 20th November ASIAS session. And I hope you enjoy this week's weekly market review updates, and we'll see you again next week in the next weekly market review. Goodbye.